Hi there, welcome to Kneppy Invest and welcome to Sunday, the 6th of July. And you know what that means? It means it's time for a technical update video where I look at charts, lots and lots of charts. Now, this is something I do every single weekend. I go through many of my watch lists looking at charts. Some of these charts I'll look at for a split second. Some of the other ones I'll look at a little bit longer, maybe 5 seconds or so. And I'm just looking for charts that are looking interesting in terms of potential breakouts, or even something as simple as a company has been in a downtrend, or the share price has been in a downtrend for a while. And I think that downtrend is coming to an end. And maybe the share price will move sideways for a while. But definitely those are sort of companies you might want to keep a watch on or eye on. Anyway, in this particular video, what I'll do is I'll go through indices, commodities, also have a look at crypto, Bitcoin and Ethereum, and then we'll have a look at bonds, currency, and then some individual companies' charts. I was going to have a look at some ETF charts because that is something I have started to do within the last few days, but I might leave that for another Sunday. Today, I have gone through or included about 12 companies whose charts look interesting for various reasons. Okay, now on to indices. Start off with, of course, as always, the XJO did close at an all-time high. But no, actually, I don't know how to say that. The closing was an all-time closing high, but not at an all-time high, if that makes sense. So we did see the high for the XJO being reached on the 11th of June, and we haven't got above that since. So it's been a while, and we're definitely in a bit of a resistance area right now at all-time highs, and for some reason, many investors are nervous when something's at an all-time high. I don't know why, because indices and high-quality companies, the whole definition of these should be they continually getting to new all-time highs. Sometimes the period between two all-time highs might be a while, but that's the whole reason we invest, is because indices and high-quality companies' prices go up through time. In fact, if you're just looking at charts, you could determine whether a company is high quality or not just by looking if the share price is continually getting to new all-time highs. So, for instance, Microsoft, it's getting to new all-time highs consistently, but there was a period of time, 15 years, where it did not get to new all-time highs. So sometimes you do have to wait a while. You have to be patient with high-quality companies. Okay, so XJO closed at an all-time closing high, and it is at a resistance area. And you notice a few of the other charts I'll show you on the ASX, I do have a purple box which sort of highlights that we're in a bit of a resistance area. Now, this resistance area means it could go either way. We could see a nice little rally from here, or we could see maybe the market drop. This resistance is there for a reason. Increasing selling, maybe some profit taking, that sort of thing, and maybe not as much buying to support the indice or the share price of the company. So we just have to wait and see who is going to win. Are the bears going to win? Or the bull's going to win. Anyway, there's no reason to be wary right now with the XJO, apart from maybe valuation. Valuation I did read something the other day that the ASX is overvalued. It sort of makes sense because CBA, which is the biggest company on the ASX, that's significantly overvalued. So we are swayed towards that. And some of the other banks also significantly overvalued as well, although ANZ may not be. And the other thing is we are above the top of the trading range, and that does sort of suggest that there could be further weakness moving forward. And you can actually see, just by looking at this daily chart, that we have been above the top of the trading range 2 times previous to this one, and both times the XJO struggled. And the last time, it actually fell off a fair bit. It went from 8,600 all the way down to 7,200. So don't be surprised if we do see a bit of weakness moving forward. Anyway, so that's the XJO. No reason to be wary right now, but there was another article I read, stocks to buy at the start of the next bull market. Well, I don't think the start of a bull market can happen when the index is at an all-time high or very close to an all-time high. I don't think you can say that's the start of a bull market. So maybe the next start of a bull market won't be for quite a few years from now, because we'll need to see the market drop if we're at the start of a new bull market. I found that article interesting. I'm trying to remember what article that was in. I think I was in Motley Fool. Motley Fool, start of bull market. I do remember one of the companies. It was WiseTech. Yeah, 3 AS growth shares to buy before the next bull market. Okay, so again, even the wording there is a little bit funny. Okay, now on to the XSO, and this is where, no, actually, must be the next one, where although I could put a purple box here, I suppose. Always forget which one the rectangle is. So you may be able to put a bit of a purple box like right there or so. No. There we go. You could say that. So this is a resistance zone right now. So we want to see the XSO, just like the XJO, get to new all-time high. That would be fairly bullish. That would be good. But we just don't know which way it's going to go because we're in resistance. There is resistance. There is selling, increased selling at these levels, and enough buying for the indice to go higher. That's the way I look at resistance levels. There is resistance for the thing to go higher because demand, supply, or supply, demand. Okay, on to the XTL. And by the way, XSO is just... XSO is nowhere near all-time highs. The all-time high for the XSO was way back in 2007 or 2008. So well short of that. If you don't believe me, I think I've shown this quite a few times before. Yeah, the all-time high is at 3,600. And yeah, that was a resistance level if ever there was one. You can actually see it back in 2000. Actually, no, that's the wrong year. Sorry, wrong year. Yep, going all the way back to 2007, November. 4,200. And then there was another top back in 2021 at 3,600. And you can just see it. You just put a line there. Just look at that line and look how many times the XSO tried to get above that line and just failed. 1, 2, 3, 4, 5, and then just failed. It's resistance. Okay, now on to the XTL. This is where we start to see more boxes, purple boxes. Here we go. We'll go back to the daily chart. And the XTL, which is the ASX 20, we can see the first time the XTL moved into this purple box was back in December last year. So not that long ago, and then fell away a little bit. Came back into the purple box back in February, and then fell away a fair bit, and has been in this purple box for the last, well, since 4th of June. So it's on about 1 month. It's been in this purple box. And so again, going sideways really for that month or during the last month. So in this purple box, and again, bit resistance. You might argue the longer it stays in this purple box, the better chance it has to break through above, because you're going to see less selling, and we've seen enough buying to keep the ASX 20 in this purple box. I could actually say that's a very valid point of view. Because if you're willing to sell once some of these, any companies that are in the ASX 20 once the ASX or this particular indice gets into this box, and you say, well, I'm going to sell my shares of these companies now because it's in this resistance zone, and you've already sold, you can't sell anymore, can you? So you probably will see less supply of shares on the market. So that's the way to look at that as well. The more time has the indice or the share price or the stock to spend within this resistance zone, the better it is in the longer term. That's why consolidation zones are really good, because it gets rid of all those silly traders or investors who want to sell. Okay, now on to the XTX, the tech. And this one is also in a purple box. Yeah, what else can you say? Struggling to get above this purple box. And just like the XTL, we have seen this particular indice just going sideways. So we're sort of in like a holding pattern right now. Probably that's a good way to say it. We're in a holding pattern. Holding pattern, just waiting, being patient and waiting to see which way this goes. So I wouldn't be surprised if we see a lot of weakness and falls away, or I wouldn't be surprised to see some of the indices break above the purple box, and that could be the start of a new medium to possibly long-term uptrend. However, valuation, that's the one little concern. If we do see a really good forward movement in the indices, that would mean we're going to see some really good results coming out. And I'm pretty dubious that's going to happen in August. That's probably would be the main driving force for any significant move in our indices are pretty good results. And I don't think that's going to happen. So maybe in a way, I'm a bit wary that we are going to see forward momentum in some of these indices, but I could be completely wrong. Now onto the banks. This one does not have a purple box and recently has pulled away from all-time highs, which is understandable. Whenever you see this sort of run from the start of April, it has been a pretty good run. We're going to see some profit taking coming in. And yeah, some of these banking companies are significantly overvalued. And, you know, when you see something significantly overvalued, you're going to see more selling and less buying because it's just the smart thing. You see something significantly overvalued that's not growing all that much. Why are you buying it? Anyway, I did see a pretty interesting article saying it's not the index funds. That's not the reason why some banks are running or were running hard, but they did not give a reason why. They just said, it's not the ETFs. Here's the proof. I thought that was interesting as well. Okay, now on to New Zealand. NZ50X or NZX50. And now this is a big no. Continue to be a big no. By the way, I did not go through all the weeklies. Did not go through the weeklies. Just had a look at the dailies. And yeah, XJO up 1%. XSO up almost 1%. So pretty good start to the financial year, I suppose. Or I suppose the banks were down. The banks were down by 1.56%. I probably should put in mining. Should I put in a mining index? I think I should. Let's do that right now. Mining. I don't know what it's called. Index. Do I have to scroll through this? There's a TSX. Can I? Oh, I just saw it. Oh no, where was it? I saw a flag, Australian flag. There it is. ASX 300 Metals and Mining Index. Is that the best one? Let's do that. Let's have a look at the mining index. I want to include that. XMM. I probably should have done this either before, but I just thought about it right then. Okay, let's put that below the bankings. Okay, so this is the XMM, ASX 300 Metals and Mining Index. I'm not sure if this is the best one, but we'll use this right now. And, interesting. In fact, the weekly chart does look interesting. So it's actually in a downtrend. A really good uptrend from 2016 through to early 2024. So, yeah, that's interesting. The weekly chart for mining is in a downtrend right now after, 8-year uptrend. And the daily chart probably is, it's definitely the tendency for this particular index is to go down, but it's not going down significantly. That's why we do see a fair bit of moving average crossovers. But the trend is definitely down. And if you just look at the highs, there is actually a downtrend line there. So just connecting all the highs, you can just see. So if you just connect the first two highs, the next high then, pulls away as soon as it hits it. And the next high then gets very close, and another next high gets close. And we did see a pretty good day on Thursday for the mining sector, up 3.27%. And then on Friday it did pull away as soon as it hit that downtrend line. So there it goes. So first time I've really looked at the XMM. If there is an alternative mining index on the ASX that you'd like to see, just throw it in the comment section. Anyway, back to New Zealand. Sorry, New Zealand, but your chart does not look all that good. Your weekly chart, I have a feeling, doesn't look all that bad. Yeah, it looks great over the long term, doesn't it? And this is sort of been going sideways for about 4 years, which is not a bad thing. It's not a nice little 4-year breather for the New Zealand Stock Exchange. Now onto the Americans. Again, no trading on Friday because Independence Day. So, and what you'll see here, if we have a look at the weekly charts, everything, maybe not everything, but definitely the NASDAQ, S&P 500, both at all-time highs. Dow Jones is very close. Russell 2000, not so. And so we have seen all-time highs in these indices. Now, this is the NASDAQ or the NDQ, so the US 100 index, up 1.48% for the week after being up 4.2% last week. I also included an equal weight one. I just want to see how broad the rally has been the last few weeks. And it's been broad enough. So equal weighted, 3% up last week and 2% up this week or last week. So it's been a broad move, I think, on the NASDAQ. So it's not only the Mag 7 companies, it's more broad than that, which is a good thing, I think. Now onto the Dow Jones. This is getting very close to all-time highs. Very close. Just finished just shy, up 2.3% for the week. The highs, we just zoom out, there seems like there was a bit of a double top there back in December of last year and January this year. And that highs, or those highs, were around about 45,000, just above that. So the Dow Jones is very close. But we've had a really good 2-week run with the Dow Jones. So definitely looking more bullish than it was this time 2 weeks ago. The question is, will this get to new all-time highs, or will this be a resistance zone for the Dow Jones? Now on to the Russell 2000, up 1% on Thursday. It's back into the purple box. So this is definitely looking better as well. So nice little 2-week rally for the Russell 2000. So we've seen a movement in the small caps as well. So 3% and 3.52% over the last 2 weeks. And again, this is well short of all-time highs. So most of the movement in America has been from the big companies over the last few years. But we are starting to see a pretty good move with the small caps, but still well away from all-time highs. Well away, maybe not 10%. We'll say 5%. 110, 135. No, we'll say it is almost 10% from all-time highs. Yeah, almost 10%. Okay, that's all I have for the Americans, Wall Street. Now on to, oh, by the way, their futures down a fair bit, 0.68% and 0.58%. And most of that was after we closed on Friday. So I don't expect much of I wouldn't expect a green open on Monday. So maybe a slight weakness in our market just because of the American futures. They're closed now, by the way, they're American futures. Now on to international indices, starting off with the Nikkei. Okay, so this dashed line at 39,000 is the 1989, I'm pretty sure it's December 1989 highs. So that's why I got that line there. I was thinking of moving it, because I was like, why is that line there? But it's just the highs we saw back in 1989. And you'll notice since February 2024, the Nikkei has been just oscillating above and below that line. So people remember that was the highs. Those were the highs back then. So Nikkei is having trouble, and we're talking about having almost an 18-month period where it's just having trouble getting to new all-time highs. It did get to new all-time high. Remember that back in March 2024, but it's just struggling since then. But whenever we see the Nikkei drop dramatically, we've seen it twice, we see a lot of buying coming in. Okay, so that's the Nikkei, and pretty good. Was it a good week? I think last week was really good. Yeah, last week was a really good week, and pulled back slightly, 0.85%. Hang Seng weekly chart looks okay. Slight pullback, down 1.52% after being up 3.2%. Daily chart shows that getting close to the previous highs back in March. So we really want to see the Hang Seng get to a new all-time high. But otherwise, chart looks pretty good. Now onto the DAX. So this one has been probably the best looking chart for a while. We'll start off with the daily chart. So we did get to an all-time high back at the start of June. We had a little bit of a pullback and then another rally, but looks like maybe, just potentially, this rally has run out of puff and has run out of puff below the previous high. So maybe, if you really want to argue, maybe this is the first sign of a bit of weakness in the DAX that hasn't got to a new all-time high. Maybe, but who knows? It could rally the next week and get to an all-time high. But maybe the first signs, just the first signs, or maybe we'll just say maybe. I think it's very wise to look at all possibilities. FTSE, FTSE. I was a little bit confused because it says UKX, and I just call it FTSE. The FTSE 100 index. Again, this one, it is struggling to get a new all-time high as well. In fact, we do have a double top there. We're 8,900. So we like to see the FTSE get above 8,900. And finally, the Toronto Stock Exchange. They were open, I assume, on Friday. I don't know why they would celebrate a holiday. Yep, they were open and only up 0.01%. Now, this looks way better than the ASX. And I've mentioned that one of the most comparable indices in the world to the ASX is probably the TSX. And this looks way better. It does look way better. So you probably, just based off that, with ignoring the American futures, you could say maybe we'll be up slightly on Monday because TSX was up 0.01%. There you go. So I don't expect a really good day on Monday. So maybe up slightly or down a little bit as well, just because of the American futures. Now on to commodities. We did get a request to look at Palladium. I'll look at Palladium. Gold is up. Good gold. This is another one where I want to see a new all-time high, because if I put a line right there for gold, we can see gold is struggling to get above that level. It is struggling. It's got to that level back in April, got back to that level in May, and then back to that level on 13th of June. And both times, once it reached that level, we saw it pull back. We could say 3 times it has pulled back. Now, the good thing is, the most previous low was a little bit higher than the low before it. So you could maybe say this is like a ascending triangle, like that. And I'm pretty sure these sort of triangles are bullish. Ascending triangles, bullish. Ascending triangles. An ascending triangle is a bullish continuation pattern. Here we goes. That looks like gold, doesn't it? Sort of, yeah. Anyway, so it looks like maybe an ascending triangle. The good thing about technical analysis, if you gave this chart to like 100 technical analysis people, they'd probably see 100 different things. Anyway, which is good, which means I do know that, what was his name? Andrew Page says, wow, if technical analysis works, then everyone will be doing it and then it would have worked. But the good thing about technical analysis is it's not, everyone will see something different when they look at a chart. For instance, if I gave you the profit and loss statement of a company, I think if you gave it to 100 people, you're going to get a lot of similar answers to how good that company has performed. But with technical analysis, a lot of people will see different things. And the first thing I saw then was a possible ascending triangle, which can be bullish. Someone else might come along and see something really negative, really bearish about it. Anyway, onto silver. So gold, would this be my favorite commodity chart? No, definitely not. What about silver? Is this my favorite commodity chart? Possibly. It's definitely up there, very close to long-term highs, if not all-time highs. Is 36 all-time high? Oh, not quite. All-time high for silver was back in 2011. There you go. Anyway, so this chart does look pretty good. I like this chart. And the very fact that there was a really good week back at the start of June, and then the 4 weeks after that, we've just seen silver go sideways. That's really good. No selling has come in. So, for instance, that selling at the start of April, there was a big down that week, down 16%. We haven't seen that. So that's a good sign moving forward for silver. So if I had to pick between gold and silver right now, I'd probably pick silver. That's just me. What about copper? Copper was in the news, was it last week? Had a really good week, I think it was, or the previous week. Maybe it was last week. Up 5.99%, and we're back to a purple box. Back to the purple box. But unfortunately, copper down 1.5% for the week. Pretty sure there was a good week. Yeah, there was a really good day, the 2nd of July on Wednesday, and then 2 negative days, down 1% and 1.54%. So it's moved, copper's moved into this purple box, and we're starting to see a little bit of weakness. So a little bit more selling because it's in a resistance zone. And in fact, copper has closed below the purple box, or the bottom of the purple box. There you go. So this was looking really good, and I was just a little bit concerned that it's moved into this purple box. So this is another case where we want to see copper get to an all-time high, break above this resistance zone. And would this be an all-time high? Yes, it would be. So definitely copper I wouldn't be as bullish on copper as silver unless copper gets above this purple box and stays above. Iron ore. Yeah, well, Iron ore did have a good week. Or did it? Up 1.37%. Is that the right week? Oh, that's right. We've already started a new week. And iron ore's had a pretty good start to the new week, even though it says Monday, 7th of July. Anyway, so a pretty good week for iron ore. Up, it says up 1.37%. It looks like it was up more than that, doesn't it? It does look like it was up more than that, but it did start down on Monday and Tuesday, and then a pretty good rally on Wednesday. Yeah, I'm not that enthusiastic with this particular chart. It's still in a downtrend, and we saw a rally back in the middle of May that petered out. So there's a chance that this little rally could peter out as well. So just based off this chart, no happy thoughts about iron ore at all at this point in time, but always have a look at it. And I'll just keep an eye on iron ore just to wait to see if it has signs of breaking out. The one chart I do like and have liked for a few weeks at least is uranium. And uranium did have a little bit of a dip last few days of last week. In fact, uranium did pull lower by 4.88%. But we had the breakout a few weeks ago. It pulled lower. And then on Friday, we have seen it pull a little bit higher, up 2.4%. So hopefully this is sort of the bottom. We just reached the bottom with uranium. And now we can see it move forward from here. And again, I need to see an all-time high, not an all-time high, because that would be ridiculous. We need to see a medium-term high. So about $26. This is a spot physical uranium. So if you have a look at uranium prices, $77.40. So a little bit higher than spot physical uranium. Anyway, so still like this chart, even though it's pulled back a little bit, that's okay. You're always going to see a little bit of pullback after a nice little breakout and rise. Okay, oil, always have a look at oil. Again, another purple box here. This purple box has been in play for a while. In fact, since the start of 2023, we're talking about over 2 years. And whenever oil falls into this purple box, we see it's a bit of support, I suppose you could say, until April and May. So during that whole tariff debacle thing, there was a bit of weakness in oil, fell below it, and then we saw oil go on a bit of a rally because of increased Middle East tensions, and those tensions have alleviated. And what happened to oil? It fell back into the box, into the purple box, exactly where it should be. So you just see how something could be traded just because of short-term macroeconomic things. Trump stuff, Trump tariff stuff forced oil down, and then increased tensions forced oil above the purple box. And now we've gone back to the mean reversion, back into normal situation and back into the box. Okay, lithium, keep a very close eye on lithium because some of the lithium companies' charts are starting to look interesting, but lithium not doing anything just yet. Coal, someone also mentioned, can you look at the coal chart? This is starting to look interesting. We've had a few weeks of a rally. In fact, if you have a look at the weekly chart, oh, it looks more than that. Oh. Maybe a few months of oil, or not oil, coal going up. We've had a moving average crossover. So definitely coal is looking good. And I have included one coal company in the individual company portion of the video. And that is, I'm pretty sure it's Whitehaven Coal. Anyway, and finally, Palladium. I won't have a look at tin, nickel. I'll have a look at Palladium just because of a request. Palladium, even though I don't have a purple box, I do have just a resistance. Although you could put a purple box here. Let's do it. I'll probably put the purple box like there. In fact, the top of the purple box is fairly obvious because that was the highs, almost identical highs back in December 2023 and also October 2024. The bottom of the purple box, that's sort of, it's up to you if you ever want to do that. So Palladium is trying to get back into this purple box. It's looking much better, the chart. I do prefer this, where Palladium is right now compared to the last time it looked like it was going to go on a rally back in October last year. But I do like this particular chart, but I still think we need a bit of proof, a bit of more evidence that Palladium is moving into an uptrend, a longer term uptrend anyway. And the main reason behind that is that resistance box. Okay, we won't have a look at cocoa. Now onto cryptocurrency. First off, Bitcoin, 108,000. I what can I say about this particular chart? It's going sideways. It's going sideways for about 2 months, maybe even longer than that. Yeah, just like a meh. It's just a meh for me. Just a meh for me. We need a bit of impetus to force it up from here, but that could happen at any minute. So I do own Bitcoin. I haven't even thought about selling any Bitcoin. So I bought at, I don't know if I've mentioned where I bought it. I bought it at, it was about 20 or 25,000. I think I bought it just after this breakout back in early 2023. I sort of remember that. It was in a downtrend and I saw the breakout. I went, ooh, maybe now's the time to buy some Bitcoin. And I was thinking I'll just trade it, but I haven't sold it. And maybe the reason why is if you have a look at the weekly chart, have a look at the weekly chart since that breakout. Yeah, there's actually been no reason to be selling Bitcoin at all. Really nice chart for this particular cryptocurrency. I would like to see it get to a new all-time high. The previous high is 112,000. That was in middle of May, towards the end of May. And so I would like to see an all-time high. But you can see that was the latest all-time high. The previous all-time high before that was January 2025. So it took, what's that? It took 5 months to get to a new all-time high. So sometimes it can take a while. And Ethereum. This one was interesting because I did put a trading range here for Ethereum between there, and it looked like there was a bit of a negative break of Ethereum back in 21st of June, but that was a false break. And it's now back into that trading range. So this is definitely a case where, and in fact, just before that, we also saw a false break above the top of the trading range. You can just see it going above and then pulling back into the trading range just after. So we want to see confirmation of a breakout here with Ethereum. But I do like these sort of setups. Going sideways, just waiting for the breakout, being patient and just waiting. Bonds, bonds up nicely on, is that Thursday? Bonds up 1.1% on 1.19% on Friday. So there you go. Still in sort of a weak uptrend. And for me to confirm this to be an uptrend, I need to see it get to above 5.15%. I'm not sure it's going to do that. I'm a little bit dubious that's going to happen. In Australian 10-year bonds, down. So it's on Friday. There you go. And that looks completely different than the American 30-year bonds, doesn't it? It's just going sideways. And finally, currency. And we want this to rally. It is up. It is going up. This is an uptrend. Short-term, weakish uptrend, but it's definitely an uptrend, the Aussie dollar. And looking nice, but slow. I want it to be faster. Okay, that's all I got for all that. Indices, commodities, bonds, crypto, Aussie dollar. Now onto some individual companies charts. I think I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Starting off with Spark New Zealand. I think we're going to see a moving average crossover within the next week. I wouldn't be surprised to see a little bit of a pullback from 230 to 220. And I don't mind this at all. And definitely with New Zealand coming out of the recession or something, maybe this is a time to start buying these sort of New Zealand companies whose share prices have dropped a lot, starting with Spark New Zealand Telecommunications. Is this like the Telstra of New Zealand? I think I did actually ask ChatGPT about that. Anyway, so maybe nice value here with Spark New Zealand. Been definitely following this one for a few weeks now. On to Lotus. This is uranium. I was wanted at least one uranium company in this list because it's my favorite commodity chart right now. And I was like, back and forth between which one to choose. And I decided to choose Lotus Resources because we had a moving average crossover. So that could be a sign that the downtrend has come to an end. It doesn't necessarily mean share price will move into an uptrend. We could see a period of time where the share price just goes sideways and we keep seeing moving average crossovers. But possible positive signs for Lotus Resources. Aurizon. Downtrend for a while. Baby cheap. We've had a little bit of a rally. the most recent high is above the previous high. That's the first good sign. So I was not there yet with this one, Aurizon, but first signs of a possible uptrend developing, a higher high, and the last low was higher than the previous low as well. So the first few signs of maybe an uptrend developing. I wonder if you could put a downtrend line here. It'd be fairly awkward because, yeah, it's not quite there. You could go like that sort of, but still fairly weak. So you could actually say, if you go with this weak downtrend line, that the downtrend has been broken as well during the week for Aurizon. Now on to PWR Holdings, a company I do own. This has also been in a downtrend, and just like Aurizon, possible signs the downtrend is coming to an end, with the share price getting to a short-term high, and that was at $7.40, which is a 3-month high, 4-month high almost. And at least the share price did get above the previous high as well. Well, I'd probably like to see a new higher low. I wouldn't be surprised to see the share price go back to, say, $6, test that level again, and then maybe move into a consolidation phase. But definitely, the whole reason why the share price of this company has dropped, the reasons behind that, I think a bit of weakness in the company. We did see the profit fall away, but definitely the growth potential in this company is still there. So in my opinion, this is just short-term weakness in the company itself and in the chart as well. And I've been paying a little bit more attention to this one for a potential buy, adding to my position. Lindsay Australia, are we seeing an ascending triangle? Now, the reason this might not be ascending triangle is they did mention here an ascending triangle is a bullish continuation pattern, which would mean the share price is in an uptrend before you see an ascending triangle. So can you call this an ascending triangle because the share price has been in a downtrend? I don't know. I'm not that advanced. Ascending triangles in a downtrend. Let's just Google that. In a downtrend, an ascending triangle pattern is often a bullish reversal pattern, suggesting a potential end to the downtrend. There you go. So that initial AI overview was a little bit wrong. So it can be a bullish reversal according to this. Although Investopedia says ascending triangles tend to be bullish as they indicate the continuation of upward trend. In some cases, they may point to the reversal of a downtrend. There you go. Okay, there you go. There you go. So this could be the end of the downtrend for Lindsay Australia. And this is actually, I thought this was really obvious as an ascending triangle. You can see the share price getting to about 75 cents, like 3 or 4 times. And then these lows keep getting higher. So that's, yeah, this is an interesting chart for Lindsay Australia. Now on to a small gold producer, Kingston Resources. It's funny because I was looking at this company about a year ago. It was a while ago. And you can see the share price was going sideways for the longest time. Just going sideways for the longest time, which is a Billy Joel song, I'm pretty sure. For the longest time, oh. Anyway, so share price was going sideways from June 2022 through to May 2025. So 3 years, share price was going sideways. Now, in that 3-year period, you can see the share price goes on little rallies and that sort of thing. But finally, I think we have seen a bit of a breakout for Kingston. I'm not sure why. Share price popped up on the 20th of May by 25%. And there was a fair bit of volume on that day as well. So it seems like that might have been a bit of a breakout for Kingston Resources. And the share price has tended to move up from there. So nice little breakout for Kingston. So this is the first time I've really paid attention to this particular chart. Other than that, I don't know anything about this company. I'm pretty sure they are a producer though. Let me just guarantee that. Yeah, they're definitely a producer, but over the last few years or half years, the production has been going down. So what has caused this little bit of a rally in Kingston Resources? Doesn't matter. When it comes to technical analysis, it doesn't matter what has caused the rally. But I do like to know. Super Retail Group. Now, we did have retail numbers come out during the week, and they were fairly weak during the week. So English language is terrible. Use the word weak in different definitions there. Anyway, so retail numbers came out fairly weak during the week. And I thought, it's not going to be good to be a retail company. We've seen a few retail companies release negative updates. Adairs, and Accent Group. There's probably a few others as well. But then for some reason on Friday, retail companies went on a nice little rally. And so even though Super Retail Group looks like, this could be looking interesting. It's not that expensive, but the last time it looked sort of interesting was back in February. And then the company released results and the share price just tanked, went down 12.5%. So is this the same sort of little rally before results are released? And will that kill this rally? So that's probably the main reason I probably wouldn't buy into this one, even though the chart does look sort of interesting right now, just because results are coming out. And I wouldn't be surprised to see some bad results for these type of companies. Step one, talking about retail and underwear. I only wear Step 1 underwear right now. In fact, on my long runs and long hikes, I wear Step 1 underwear. It's my favorite type of underwear. Brilliant underwear for that sort of thing. But I only buy Step 1 underwear when they're on significant sales. So like, I think last time I bought 5, got 8 free. Sometimes you can buy 10, get 10 free, that sort of thing. That's the only time I buy Step 1 underwear because they tend to be fairly expensive, but they're very comfortable. Anyway, share price stays down a lot. This one goes up and down in trends. There's me buying some shares back in the breakout. That was a beautiful breakout. This is one of my favorite breakouts. I did not get it right on the breakout. Share price going sideways for the longest time again. In fact, the share price of Step 1 went sideways for about is that 1.5 years? Oh, it's not that long. It's not as long as I thought it was. And then the share price rallied back when they released results in August 2023. Beautiful breakout. Just study this breakout, Step 1. And then the share price went into a great uptrend. First signs of the uptrend, bit of weakness was April 2024. And yeah, that was definitely the first signs. And now it's in a downtrend. How much further has this to go down? Don't know. You could definitely say there's a bit of value to this company. I do actually think this company is better now than it was when I took a trading position. So the very fact the share price is moving towards those levels is really interesting. I'm trying to remember if I still own this. Don't know. I'm definitely not trading it, but did I keep a few on the side as a longer term hold? I don't know. Anyway, why did I include Step 1 in this particular video? The main reason is they had 2 really positive days during the week, on Tuesday and then on Friday. Share price up 12% and then 11.2% on those days. Volume wasn't a massive. We've just seen a little subtle increase in volume through June. You can just see a very subtle increase in volume in June compared to what we saw in May. It's very subtle, but it's there. So that could be value investors coming in and going, oh, there might be some value in this company. And I do like those 2 little rally days. I do like those 2 days. So maybe the bottom is in for Step 1 clothing. Maybe now is the time to add to my position if I have a position, which I'll find out after this video. I'm pretty sure I do have a small position in Step 1. Now onto Orica. I completely missed this one. And I think the reason I missed Orica is because I'm the biggest fan of this company. That's probably it. But we saw a brilliant breakout a few weeks ago. In fact, I'd probably say start of June, so about 1 month ago. And this chart looks pretty nice. Really nice breakout. In fact, I'll probably put the line right there. And really nice breakout. This chart doesn't look half bad. I don't think this would be a high quality company. And in fact, let's have a look at the chart. And if you have a look at the weekly chart, there is no way you would own this for the long term. Because if you bought this company back in 2007, you're still in the red. In fact, you could actually say there's a long-term downtrend just by looking at this chart. But definitely a trading stock, and maybe this is a nice little trade right now with the share price breaking out to long-term highs. And when I say long-term highs, the last time the share price was this high was back during the COVID-19 debacle, collapse, panic, we'll call it panic. So that's Orica. The chart looks good. I'm just ignoring it. Well, I had been until today. MLG, this company did release something quite a few weeks ago. I thought I liked it. I was like, this is good. And definitely we have seen the share price move back into an uptrend. Maybe not back into uptrend, but definitely in an uptrend. This was back in May. And I don't mind this chart. And also quite a few companies within this space. I'm pretty sure this is like a mining services company. industrial services, it says, engineering, construction, to the provision of haulage, site services, open pit mining services, and crushing and screening services. So quite a few companies within this space are doing fairly well. Their charts are doing fairly well. So this is another one, maybe to put on your watch list. MLG Oz. Chart doesn't look half bad. And finally, the coal company, Whitehaven. Yes, Whitehaven. In fact, this was the last chart I looked at. I have not gone through all the charts at this point in time. So this was the last chart I looked at, or one of the last charts I looked at. And we've had a moving average crossover, share price at a 3-month high. Coal prices looking, or the coal chart looking interesting as well. Looks like the share price popped up on Thursday. Did the company release anything? Because the share price did pop up. So this could be a breakout. I like this chart. This is actually I really like this chart. So that's Whitehaven Coal. In fact, if I had to pick one chart, my favorite chart, out of all the charts, individual companies charts I've seen, this would be my favorite because this could be the start of a long-term uptrend. That is what I'm looking for, potential starts of long-term uptrends. And this could be it for Whitehaven Coal. But again, it all depends on the price of coal moving forward. Okay, that was all I have for this particular technical update video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.